I thought there was supposed to be music. Isn't it? Bum, 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 bum.
Yeah, it's usually that thing, but sometimes
That caught me off
I've
guard.
been petitioning against it anyway. So
Right. Welcome to the Trader's Edge. I'm Jim Uriel. That's Bob Iacchino. And the good news is I got this new Elgato face cam camera, and it has some setting, I think, where it like softens and blurs and tries to make me look younger. And then I thought maybe I'll go because I want to adjust it to regular. And then I thought, why would I adjust it to regular? If it blurs and makes me look a little younger, that seems good to me, no?
you got that. Who was in Casablanca? Ingrid Bergman.
Bogart and Bergman.
Yeah. Ingmar, Ingrid, what the hell's her name?
Ingrid.
By the way, before we bring the guest in, Arm Holdings just reported, and it looks like revenue 607 million, estimated 567. So they beat on revenue. Obviously, for people who completely lost in the stock market story, this is a huge semiconductor producer out of the UK. It's looking like it's down 6.5% right now, down $7.
Okay.
So,
and the stocks,
anyway,
the stocks
that
rally, right? It's after the Fed today, the stocks rally, which is interesting.
Yeah,
Okay.
they rallied in toward the close.
Well, anyway, I'm going to bring on our guests now because we have a lot to break down. It is Fed Day. You guys who are on FinTwit know that we are not afraid to have an anonymous Twitter account, provided that we vet the shit out of them with everything they tweet and everything they post. And we believe that this guest knows a crap ton about macro, a crap ton about markets. And I think this is going to be a very fun interview. And you can say that Bobby and I are stupid and have bullshit opinions. And sometimes we agree, but you can't say we don't get good guests. And this is going to be another one. Let's bring in Mayhem from Markets and Mayhem. Or is it Mayhem and Markets? By the way, having an anonymous Twitter account, that I wish someone would have told me that was an option like 12 years ago. It affected me quite a bit. No, I'm just kidding. I wouldn't change a thing. I know if companies couldn't be aligned with me because of what they think are political views, which I don't, maybe they are, maybe they aren't. But if they can't be aligned to me, I'm perfectly fine with that. But Mayhem, thank you for coming. How are you?
I'm doing well. It's an honor to be here with you guys. Thank you so much for the invite.
Well, pleasure's ours. And what region of the country are you coming to us from?
East Coast.
East Coast. Nice. Is it a nice day there?
Yeah, actually, it's beautiful. Spent some time outside today. It's a great way to spend the Fed Nest day. Not tuned into the market because, I mean, if you look at the tape, what an absolute crap show it was today.
I know. And I did not want to trade the Fed at all because of that. It just always seems like it's back and forth and noise, and it seems ugly to me, so I didn't. But what did he say that you found interesting? Was anything that surprised you or no?
So I found it to be what I was kind of hoping to see from Powell. You'll note in December, he made a bit of a pivot. We had 4 cuts, or basically 100 bips of cuts going into this year. They slowed the run rate of QT and then did so again this year. But I was hoping that Powell would start to kind of slow things down because I felt like they were going a little too aggressively on the cutting. The economy has remained rather resilient. Unemployment is still near historical lows. And while we did get a negative Q1 GDP print, it wasn't because of a slowdown in the economy as much as front loading of imports. And he echoed a lot of that. So it was heartening to see him kind of tuning into the pulse of what's going on and saying, look, with everything that's going on, we have too much uncertainty about what some of these economic outcomes may be to move the dial too much. And to their credit, for folks that were looking for some degree of easing, the Fed did take their foot off the gas of QT, lowering its run rate from $25 billion a month to $5 billion a month during their last meeting. So they've given us a crumb, and that bought them some time to not have to cut rates quite yet. So overall, I found him quite hawkish, but I think that this was the right approach to take for the moment.
So do you guys think I'm crazy? One of the things that I noticed, and Max hates when this microphone shows, so I want to make sure I pull it in here. You guys notice, so when I was looking at the statement, and I was looking at what changed, right? Some of the stuff that changes is stupid. Like, for example, instead of saying recent indicators suggest, they said, although swings in net exports have affected data, recent indicators suggest. You could put that sentence in any Fed statement, right? Recent swings in net exports have affected data. That could go on any time where exports have changed a little or a lot. The thing that struck me was the committee, or where is it here? Here we go. The committee is attentive to the risks to both sides of its dual mandate. That's where it stopped last time. This is the addition, and judges that risks of higher unemployment and higher inflation have risen. Now, we all know that as stagflation, right? Higher unemployment and higher inflation. That statement, I want to know if either one of you or both of you think I'm nuts on that. That statement seems to be highly political because nowhere in data has inflation risen, nor risks of inflation. That to me seems to be a judgment call on tariffs. Mayhem, do you think that's a crazy stance to take?
I think that the big thing here, and just to kind of foreshadow what I'm going to say, is Powell goofed hard in 2021. No one can deny that he's going to go down in history with his credibility being transitory for saying inflation was transitory. So at the end of the day, he's now harnessing his inner Volcker to be more patient and more data driven. I'm using air quotes here that you guys can't see, but that's because I don't think he wants to make the same mistake. Is it to some degree political? It is totally possible. The Fed's entire view of the economy and what their mandate was shifted at the December meeting after the election results. So it's hard to deny that there's some cause and effect relationship there. Whether coincidental or not, that remains to be seen. But at the end of the day, I do think that there are upside risks in inflation, but it's very speculative. It really depends on how much of the tariffs are actually realized in survey data from things like CPI and in the aggregates of consumption data in things like PCE. Right now, as you've said, none of that's showing up. And, it could be some time if it even shows up at all. On the other side, unemployment risks, I would agree those are on the rise simply because we are seeing some signs that the economy is gradually slowing. I don't know that we're going off the cliff into a recession, but I do think, with UPS laying off 20,000, Intel laying off 20,000, lots of companies talking about planned attrition through return to office and other sorts of things, there is that slowing happening. And it's in a lot of the other data. ADP was pretty underwhelming last week as well. And while non-farm came in better than expected, we know every time we look back, it gets revised lower. So I think the bigger risk is to unemployment than inflation so far. And I would say that the inflation side of it's very speculative.
Will you guys agree with me on this? And I think, Mayhem, you just said it. When we look at Jay Powell's career, literally is one of the biggest policy mistakes that we've seen in our lifetime. And not because we're saying he should have known. We're saying we all kind of knew. I can show you 1,000 different economists in June and July of 2021 saying, well, this is stupid. I mean, CPI is already raging. The housing market is ridiculously high. And he's going to hit the gas for the next 8 months. I don't think there's any possible way that he can, in 20 years, that someone can look at his career and say that he was a good Fed chair, despite the fact that he's a statesman and he speaks well and he seems like a hell of a good guy. First of all, am I wrong on that, Mayhem?
I think that the one thing he's done really well is communicate. But I do agree that was a fatal policy error. And between the fiscal largesse and the monetary largesse back then, that was exactly what catalyzed that huge inflationary impact. You pretty much shut down global supply chains and flooded the world with money for years. That was exactly the opposite of what we needed. And like you said, a lot of economists were looking at financial conditions back then and saying, wow, these are super easy, and yet the economy is not in dire straits. There's really no way we don't get rip-roaring inflation. And so we did. So I think that was a total tactical error on his part.
But Bobby, now to answer your question, this is going to surprise the hell out of you because I'm always accusing the Fed of being political. I honestly think Jay Powell doesn't know whether he's on foot or horseback right now because of the tariffs. Even the three of us, we can talk to her blue in the face about, is Trump actually planning on putting on tariffs, or is he just saying he's planning on putting on tariffs to get people negotiating table to drop tariffs? Anyone who pretends to know in this call, I think, is just saying an opinion and stating it as fact. Is that unreasonable to say, Mayhem?
I mean, things change by the minute.
Yeah.
How do we even know what the next day looks like? So yes, 100%.
Yeah.
So let me throw this out. And again, I want you guys to tell me if I'm nuts or not. If we're looking at tariffs as the driver of inflation, by the way, wage growth still well above 4.8%. But Powell did say that the Fed did say that they don't see wages contributing to inflation. Okay, fair enough. I guess it was transitory. when you look at tariffs, I had a conversation with somebody yesterday in the restaurant business. He says, I get these to-go containers that are 20 cents. They're made in China. The closest competitor that's not made in China, the same containers are 80 cents, right? And I said, okay, so let me throw out, I know nothing about the restaurant business. Mayhem, if you don't know, Jim owns a pretty popular and well-known restaurant in the suburbs of Chicago. And I said, okay, so your price is going to go up 4x on your to-go containers, right? How many things do you fit in there? He goes, well, usually an entree, possibly an appetizer and a side. I said, okay, so if you raised each one of those 15 cents, would your orders drop? He goes, maybe a little. I said, okay, that's number one. Number two, would you keep raising those prices every single month because this one thing went up once? So my point being, inflation from tariffs, even if the tariffs stay where they're at right now, which a lot of analysts, including Jim Miller I think he's from Morgan Stanley, said basically the worst part of the tariff scare is over because negotiations have started. Now, that may not be right, but if tariffs stay here, it's a one-time swing, even if they cause inflation, even if the countries don't absorb them and the companies don't absorb them. Okay, what's nuts about that? Both of you, ma'am?
It's not nuts. I think there could be knock-on impacts that take more than, one or two data points to be realized, because you could have some staggered impacts through initial recipients to intermediaries down the supply chain. But eventually it becomes something that's a backward-looking phenomenon. It's more part of the cumulative inflation, the rate of change. So I would agree the impacts are more short-lived unless this turns into something else, right? Where it's a tit-for-tat trade war. And we saw very quickly when it escalated to that, there was an immediate turnabout. Liberation Day lasted less than 24 hours before there was a 90-day pause.
So again, and
that's the fun part of all this,
right?
Yes,
I get always accused of being some big Trump supporter because I voted for him, and then people will be like, "But Trump said this." I'm like, I don't listen to what Trump says. You can't. It changes in 5 minutes. I didn't vote for Trump. I voted against what I thought was bad fiscal policy from the other side. I make no apologies for it. Trump's not my guy. But to Bobby, to your point, so in tariffs historically, and I am not for tariffs. If he's using them as a cudgel to get people to the negotiating table and it works, then he's right. If it doesn't work, then he's wrong. That's his job, not mine. But historically, tariffs. One, the exporting country oftentimes subsidizes the sector. China particularly has done that throughout history. Two, the exporting company oftentimes compresses margins to stay competitive. The company that imports the goods before they sell the finished product may compress margins as well, and then it gets to the consumer after whatever currency evaluation might happen in the meantime as well. And as you said, Bobby, it's not an embedded, persistent inflation expectation thing. It seems like a one-off. I don't think they're that huge a deal, and I just don't think they're that huge a deal. Ma'am, you disagree with me on that, don't you?
Well, what I'll say about it is, look, I think you're making a lot of good points, and that with some of the tariffs, the lower end tariffs, say it's a 10 or 20% tariff, that's easier to eat for an exporting country, for a producer, for an intermediary. Collectively, maybe they can make a meal of it. But when you start talking about, over 100% tariffs, I don't think anyone's going to want to eat that. Even the Trump administration has described that as being essentially an embargo on trade. Yeah. Now, we also have a lot of the washing that happens. And I think it's important to mention tariffs are a system built on trust, as is trade. When things come to our ports, there's no way we can evaluate what's in the container for every container, let alone where it all comes from. So there are situations where China is going to export to Vietnam and then export to America. Or like with the last trade war, they're going to start making Mexico an intermediary for Chinese produced goods to enter the country on ostensibly lower tariffs, which is one of the reasons Mexico became our largest trading partner overnight, almost miraculously. So I think that it's a more nuanced picture in the sense that what the actual effects are in aggregate has yet to be realized, because there's a lot of ways to skirt this stuff.
By the way, Bobby, I want you to take the next question, but you people are watching. If you don't think that was an important takeaway, that was a kick-ass answer, Mayhem. Thank you very much, Bobby. Sorry.
No, it's okay. I was laughing because I was looking for specific examples of where tariffs have affected prices. And Temu had a dress online for $18.47 that now costs $44.68. And I thought, you can buy a fucking dress for like $45. I could barely buy a t-shirt for that much, and that's all I wear. The second part to that for me is this comes to where like Trump did that funny, stupid thing where like, hey, maybe instead of 30 dolls, a girl will have $5. Best doll ever, but they'll only have 5 of them. $44 for a dress. Now, I'm not trying to make light of, what things cost for people, but to a certain degree, I feel like an $18 dress, I should tie a story to that. My wife one day came home and said, I have good news and bad news. I said, what's the bad news? She said, I bought 9 dresses. I said, what's the good news? She said, I spent $78. I bought them at Goodwill. Not going to be affected by tariffs. I'm just saying. But the short end of that is an overall equity perspective. Mayhem, what do you like and what do you dislike? And I'm not talking about individual stocks, although you're welcome to name them. What do you like sector-wise, or do you like anything right now?
For what time frame, Bobby? For the next quarter, half, or a year?
Short to medium term. We got another guest next week. So
got it. Yeah.
Yeah. So I think that I will say that no matter what the environment is, there's always an opportunity somewhere, and I think that's something that gets kind of lost in all the back and forth. Like you either have to be bullish or bearish in a specific time frame and on everything or nothing. There's a lot of gray area in between. I love the idea of a pair trade here. I think it's one to start layering back into. It's long, high dividend, large caps. That's the SPHD ETF, and short S&P 500 large cap high beta stocks, and that's the SPHB ETF. And the idea here is that I don't know that we're 100% out of the woods. I still think there is some de-risking to do. I also still think there is some rotation into these large dividend-paying stocks, particularly as we see some signs the economy could slow further, and eventually the Fed will resume their rate cutting. That tends to be really good for those lower beta dividend-paying stocks. We're thinking about things like utilities, healthcare, staples. We've seen some hedge fund flows growing in that space as well. And then looking at de-risking a little bit, as money managers do, in that high beta space. And that's not only stuff like big tech, but also some of the cyclical areas of the market. So I feel like that rotation still has some room. And what's really interesting about this pair trade is it tends to mirror volatility. And if you look at 30-day realized volatility, it's still easily 20 points higher than where the VIX is. It suggests we're still in the illiquid environment that led to that. There's still room for volatility to potentially run higher. So for me, I'm looking at that as a way to sort of capitalize on the potential for vol expansion without direct VIX exposure, but similar returns.
So give me those symbols again, too, because that
Sure.
is something I'd be interested in looking at. What's the symbol for the high dividend?
Yeah, the long is SPHD, and the short is
High
SP.
dividend, HD. Okay.
Yeah, and the short is SPHB for the high beta.
Okay, another question. When you buy that high dividend stock, is the dividend portion of it just baked into the price, or does it actually pay out a dividend?
It pays out a dividend,
Okay, interesting.
which is
And
good
one last
because that.
question about that is, can you
Yeah.
chart those as one line, those against each other? Can I
Yes.
do it on my Bloomberg, you think?
You probably can do a ratio chart on there. You can absolutely do one on stock charts as well.
Okay,
You
got
can.
it. Yeah.
All right, there's a couple comments I want to go to real quick. Sagar said, why is the market reacting different this time after the Fed minutes? And then he followed it up with, it appears to be market is very bullish, ignoring JW Powell, not to be confused with the JW Marriott, or is it waiting for Swiss MTG outcome?
That's the China announcement tomorrow. They're meeting in Switzerland.
Oh, the meeting. Okay, the meeting in Switzerland.
Yeah.
Mayhem, do you want to tackle either one of those?
Sure.
I have no
Yeah.
clue.
So I don't look. First of all, I think with our much hollowed Fed Nest Day, we have to understand that the reaction is not necessarily something that is a function expressed in a single day. I think it takes more than one trading day to bake in what happens with the Fed. So I'm going to be more interested to see how we close the week than how we close the day. Today, we had a whole bunch of call flow targeting these higher SPX strikes, even as the Fed meeting was happening. We also had some of those puts that were taken on late Monday that helped to bring the market down in pretty short order towards the close. A lot of that was just-in-time hedging. When those hedges are removed, it's liquidity positive. So I think baked in, we had constructive call flow, puts being taken off. That helps to push a market higher. And the book depth on the market was pathetic. It was what, like 27K on the S&P E-mini futures contract? I mean, you can move that around yourself pretty much. So at the end of the day, I don't make a lot out of today. I want to see how we close this week. I still think we're very overbought here, and we have room to correct lower.
That by the way, I love that answer. Several of the answers you've given, I think, have been perfectly mind-blowing. I will say this, that his answer is going to be way better than the answer I'm about to give. But I do think from a fundamental standpoint, it is reasonable for me to believe this is out of the way. What are we looking forward to now? Which could, in fact, be, some sort of agreement with China. That's where the risk maybe is. So I think Mayhem's answer is better, and that's probably what it is. But I think my answer is a 10 to 15% chance. Does that make sense, Bob?
It does. I'm sorry. I'm just reading something here. Brian Sullivan, who's that crap network that we don't mention.
I like Brian Sullivan. I've
like
been
Brian
friends with him for a long time. Yeah, I hate that network.
Brian a lot.
Yeah.
He's a giant, by the way.
He's like 6'8". Yeah. Right.
Yeah. Mayhem, you don't know this. Well, maybe you do know this. Jimmy and I both spent a lot of time on TV, and we both were quasi.
I've watched you guys for years. You guys are inspirations for me. So it's awesome to be here with you guys.
I couldn't tell by your face here how young you were, but Brian Sullivan's at the Milken Institute conference, and he said that from everything I've heard, Jay Powell is a good and smart guy. Have to do that because he works at CNBC, which sucks ass. Yeah. He's a good and smart guy, but there are many here at the Milken Institute conference that think the Fed may be behind the curve. If tariffs are really going to crush the economy, why cut rates now? Why not cut rates?
Why not cut rates?
Get ahead of it. Fed credibility, definitely a topic. So that brought something to my mind. Do any of us truly care about Fed credibility? Or do we just try and
explain what this Fed credibility thing you talk about is? What the fuck?
I don't know. I'm reading it. I mean, I've heard over the last 30 years, the Fed doesn't want to lose credibility. The Fed doesn't want to lose credibility. In that 30 years, I have never had an investment thesis around the Fed being credible.
No, that's my investment thesis has been the Fed making mistakes to the dovish side for 25 years, and I've made a freaking fortune on it. Mayhem, you take it though.
Oh, I love this. This is perfect because I've discovered the Fed's true dual mandate is fomenting bubbles and destroying bubbles. Exactly. And so if we look at it from that perspective, they've got incredible credibility. But no, realistically speaking, going back to the time of Greenspan, which I lament about because I never knew what the hell he was saying. He even said later, if you thought you understood what I was saying, you got it wrong. Well, if they're going to potentially obfuscate as a point of public relations, there's no credibility there at all. This is one area where I give Powell positive marks because at the very least, he tries to communicate. He may not always be forthright. There are times where he's been genuinely insincere about what he's been talking about, what's been going on in contrast, but he at least tries. But overall, the Fed as an institution, celebrated being alive for about 111 years now. This past Christmas, it's an abomination. It's a creation of the banking system. It serves the financial elite, and it just transfers wealth and power upwards. And I've been very open about my view about the Fed. I mean, I think that at the end of the day, if you're looking at them as a wealth transfer mechanism and a bubble creation and destruction mechanism, 100% credibility, gold marks. Anything else, normal functions of a central bank, maximum employment, minimal price, or price stability, as it were. If you look at a chart of cumulative inflation, it's just up and to the right. Where's the price stability?
Fails, right? I agree 100%. You said something, they get a gold star, and all I could think of was gold. I've been thinking of that for 3-4 years. When I completely lost faith, not just in the Fed and their stewardship of our currency, but the entire global financial system and their stewardship of their own currencies, I'm like, oh, I got an idea. Buy freaking gold, which brings me to the next question for you. Okay, gold is through the roof. Does that move have legs? Silver has lagged massively. The ratio has bumped out to a really, really high spot. I think it's above 100, but I didn't see it today. Copper, things like that. What are the trades in the commodities and why?
I love gold overall. It's still in a giant Bollinger Band squeeze breakout. It's this sort of larger volatility move of expanding price ranges that says, yeah, maybe in the short run it can consolidate a bit. And Fed weeks are almost always bad for gold, by the way, like almost every Fed week. But I think moving forward, gold's going to be much higher. I'm looking for gold to be over $4,000 an ounce next year. I don't think there's really two ways about it. And my way of looking at gold is it's not really an inflation hedge as much as an uncertainty hedge. And may we live in interesting times? Well, we do, and that means it's time to be bullish of gold on a forward-looking basis. I still wouldn't want to necessarily get super long at current levels. I think it would be better if someone's looking to get exposure to gold here and now to look at some of the higher quality miners. I think that's where you see so much margin expansion from dropping oil prices and rising gold prices, that the better quality ones, because a lot of the management of these companies total shit shows, so you got to be careful, but the better ones could outperform gold from here. On the silver side of things, I like silver. The ratio is one part of it, but what really has me excited is seeing China finally getting more enthusiastic about domestic stimulus. Now, the Chinese communists have zero credibility. They're a lot like the Fed in that respect, but they have been talking up this idea of stimulus for 2.5 years. And now they're actually going to put some money where their mouth is, not necessarily because they want to, but because they have to offset some of the impacts of this trade war on their economy, where factories are shuttering, workers are being sent home, real estate is still in a malaise. China is the second biggest industrial consumer of silver. They're the biggest industrial consumer of copper. So it's hard for me not to be bullish of both of those. Copper's got structural deficits coming into play as well. So I like copper longs. I like Freeport-McMoRan as a long in copper as well. I also like longs in silver. The silver space is a little harder to get pure play exposure, so we'll be more interested in streamers like Wheaton Precious Metals and silver to get the best of both of gold and silver.
Luis, can you put up the banner? By the way, the guys who watch this show, we want to tell you a couple things. One, we so appreciate all the support we've gotten from you guys in this. Bobby and I trying to create other platforms to be able to give honest opinions away from legacy media. And Tradier has been a huge supporter of that. The way you can support Tradier back is to sign up for a free trial of Tradier Pro, which is an options trading platform that we talk to some of the highest end options traders we know, and some guys just beginning who all say, oh yeah, we use it, it's great. But the best thing is it is free for how many months? That say, I don't want to put my glasses on. Is that 3 months?
3 months. And also trade the futures markets. 35-cent commissions on micros is a really good commission level for retail.
It's a good deal. So all you have to do is scan that QR code and sign up. Let's go back to the metals discussion. Do you have targets on silver and copper, or do you just think this is someplace you want to be in the medium term?
Silver, I'm looking for it to retest its 2011 highs. I think that's about $48 an ounce. It's the time scale for that. I'm looking for later this year to early next year. I think it's more of a long-term play. Copper, I think we can easily retest the recent highs just under $5.40 an ounce, probably next quarter. I think copper is going to move faster than silver.
So I want to go over, for people who don't know, Jim and I and our technical analysts, my partner and Bath Trading Partners, have a newsletter. And the last issue of that newsletter was like 19 pages long. And I want to bounce a couple of things that were in the newsletter last week off of you. And if you don't have an opinion, just say pass. If you have an opinion, I'd love to hear it. So the first one, I mean, we own Walmart and we own Costco. They print money. It's all fine, right? I mean, you could hate them. Stop me if you hate either one of them, but we're long both of them. MicroStrategy and IonQ. Know anything about those?
I do. So for Walmart and Costco, I just think they're expensive, but I think they're smart places to be. And certainly there's a lot of institutional money continuing to pour into both names. So it's hard to kind of get on the other side of that. With MicroStrategy, I think my biggest concern about this one is just that I would rather have exposure to Bitcoin directly, because there's no key man risk in Bitcoin, and because Satoshi is not even involved with any of this stuff anymore, if at all. But with MicroStrategy, the company itself, and then all of their leverage into Bitcoin, and then whatever happens to Michael Saylor, those are risks that one doesn't realize getting direct exposure to Bitcoin. So if I had the choice between the two, that's what I do. And if I wanted to get the leverage, I just take it on with margin. For IONQ, I feel like, and I might be a cynic here, but I feel like quantum computing is more of a 5 or 10 year out story. And a lot of these companies are likely, unfortunately, not going to survive to see that that sort of 5 or 10 year time horizon. Now, I may be wrong. Maybe this is a different company, but I think this was the one that used to be a beverage company
Yep.
that then became
That's
a
the one.
quantum computing company. Yeah.
That's
So I
the
don't
one.
know. I'm cynical. I do have a tech background, and so I do have some
Balls,
appreciation
didn't
for
it?
some of the moving parts. But yeah, I think that IONQ and some of the other competitors in this space, there's going to be very few of them that survive to realize that sort of monetizing quantum computing, because inevitably it's going to be an extraordinarily expensive technology to not only research but also to scale into commercial usage. And they've got some formidable competition with the likes of Amazon, Microsoft, and Google. So I'm just a little bit concerned. I like this more as a short squeeze play than as anything else, because the float is not too big, about 223 million. Float is short. The short percentage of the float is about 18%. So it's short interest at about 40 million shares and average volume about 18 million. You could get a squeeze that lasts maybe 3 or 4 trading days and shoot this thing up 20%. That's what I'd want to look at it as, because hedge funds are super crowded into equity shorts right now.
I'll ask you one more about these, and just so people know, the recommendations in the newsletter, it's an active investing newsletter. It's not 5-year holds. We may have that down the road. We may have some longer holds, and we welcome anyone that wants to take the trades we recommend to hold them longer. But we're generally giving a target on these. So, for example, we bought Microsoft and we were out on the earnings day, and that basically was about a 2-day trade, right? So they're not active trading; they're active investing, because we think the stocks are all pretty much well worth it. Although IonQ was in a section of the newsletter that my partners, one of them being on the screen here, made me put these are higher risk trades. So don't go crazy here, which I resent, but I'm happy about. The other one is SSR mining. SSRM is the symbol. And then I'm going to ask you another viewer question, unless Jimmy's got something. SSRM, I don't know if you're familiar with them, but their main product is gold. Their biggest operation is the Kopler mine in Turkey. They basically mine gold in a lot of quasi-friendly areas. I don't know if you want to put Turkey in there, but they have Nevada, they have Saskatchewan, Canada, they have Argentina. They also mine for silver and lead. You have any opinion on that, or is that a pass?
Well, in Turkey, I guess we could call them friendly. We trust them with our nukes, right? So we could trust them with some gold mining, probably. So I love the chart. The valuation on this company is very reasonable. It's in its strong structural uptrend, forward P of about 5.64. Not a lot for me not to like. Earnings growth is super robust. So yeah, I'd be bullish on SSRM here for sure.
Yeah, so we bought that a couple days, or not a couple days ago, but about August 15th or so, and took a little bit of heat, but it's kind of going our way now with gold falling, basically outlining what you just said about miners potentially outperforming that. So real quick, Jamie, if I could, I got a comment from Tim, who watches all our shows, personal friend of mine and a friend of the show. Do you guys think 25 or 50 basis points of Fed rate cuts matter? Mayhem,
In what time frame? I need to know, Tim.
He'll type it in a second. So Mayhem, what do you think? Go ahead and list out time frames where they might or might not matter.
I think that it matters in the sense that if we actually did get a cut of either size, it would indicate they're back in cutting mode, because they've been sitting on their hands for quite a while. So this would actually signify a departure from that, oh, we're data driven, we're very uncertain, there's risks to the upside in inflation and risks to the upside in unemployment, we have no idea what's happening. This would tell us actually they're leaning much more on the dovish side, and often when the Fed starts cutting, there's more to come. So I would read into that as being significant if it happened. I would also be very interested to see how short-term interest rates react. Are they pricing in more cuts to follow? Often is the case they do.
Jimmy, so Tim said 2 or 3 months if you didn't see it.
Okay, no, that's cool. That's interesting. I think the notion that the Fed's cutting, they must know something or see something that the market doesn't, which, by the way, we used to do that bullshit for 25 years. I think we do it less now, and we think the Fed could just be making a mistake, which, by the way, usually they are. So I think it could, as Mayhem said, give us an indication that they want to be dovish, that the Fed put perhaps is still in play, and then I think it's a pretty bullish sentiment. Do you agree, Bob?
I do. And that actually made me think of a question for Mayhem, if you don't mind.
Not at all.
Yeah.
Are you a get rid of the Fed person?
I think that if we take an honest analysis of economic and
This is a
market
yes.
outcomes
This is a yes.
over a long enough period
I
of
can tell
time,
it's a yes. Go on.
that we can determine, and there was even the forgotten depression, which the Fed didn't even exist and didn't do anything about, at least, and it resolved itself. I think at the end of the day, central banks are essentially mimicking, and I think you probably actually asked me this because I was talking about how do short-term rates react, because we all know short-term rates really are the Fed. Right? It's really not the Fed making all of these decisions with, hundreds of academics and all this backward looking data. It's really just them looking at rates and making an assessment as to how far behind the curve they are. So I would say ultimately, if the Fed is indeed, as I stipulated, this upward wealth and power transfer mechanism, which I think all objective evidence points in that direction, then yeah, there's a lot to say about the idea of giving a group of banks with just a very small hybrid board of governors that has some government oversight and the rest of it very opaque, not really something that goes with the ideals of free markets or capitalism. It's very central planning oriented, and it's also very much favoring economic elites and oligarchs over average people. So I can't say I'm a fan.
I know Jimmy's opinion, but that's not going to you.
Fabulous guest so far. I say I am a basically end the Fed in its current state person without any question at all. Should there be, and perhaps, if they gave us a week, we could probably come up with like 20 different economic indicators. If this happens, perhaps you cut a quarter point. Perhaps you raise a quarter point if these things happen. I don't think it would be that hard to kind of automate it and try to get it away from being, and I 100% agree that it is either was created to be or quickly morphed into be the biggest wealth transfer mechanism in history. All you have to do is look at how assets have moved higher and how the dollars have moved lower. It is not any sort of rocket science. But I think that it is absurd to have a Fed that gets in. Feds were buying corporate bonds, for God's sake.
Yeah.
They were, right? Or was that the government? Whatever. Somebody was buying corporate bonds. How in the world is that not distorting markets, setting us up for monster falls? I think the whole thing is absolutely asinine.
Yeah, the problem that I have, if you want to talk about that specific episode as well, is that when something goes out of the purview or the legal authorization of what the Fed is allowed to do, they simply spin up a different entity to minimize the direct liability. This happened during the great financial crisis. The New York Fed was spinning up Maiden Lane 1, Maiden Lane 2, and then a variant of that was also set up for some of that nibbling around the margins of corporate debt. And I think it thoroughly distorts price discovery, and quite frankly, I think it perverts risk management. If you look at the response, for example, to the great financial crisis, we probably could have had a better outcome if we didn't just bail out giant banks, allow the most massive consolidation of deposits and concentration of them. So now, if going into the great financial crisis, we had some banks that were too big to fail, most assuredly now we definitely have a very entrenched banking system that was largely facilitated by that sort of bailout rather than let risk be realized the way it should have, maybe protecting depositors, but letting the casino portions of those banks wind down as they probably should have. And that's led us to where we are now, to an economy that is far too reliant on the financial class and the FIRE economy than it should be.
So Tim posted a comment on there that I'm sort of not surprised by, but he said giving the power to a few market makers for settling LIBOR didn't work out so well. I just want to say really quickly, you're not going to get fraud out by having a Fed, right? So you're basically saying that the Fed didn't catch that either. You know what I mean? We had a Fed when that happened. So I don't think the Fed, getting rid of the Fed wouldn't cause that to happen more often.
And I will add too, that's the settling of LIBOR. Whoever set up that system where you throw out the top 8, throw out the bottom 8, average the middle 8, knew full well that it was going to be gamed. That system screamed, let's try to make this as little bit as gamed as possible, even though we obviously can't fight it. But to think that the Fed steps in and they're going to be better at these things than a market-based system that was failing, no question about it. I don't think so, but yeah, let's hear. I want to hear the story.
Real quick.
Yeah.
LIBOR settlement process was set up and coordinated by a combination of regulators and law enforcement agencies across several jurisdictions in government. So the system was set up again by the same kind of people who are at the Fed.
Right.
So Yeah, just on the note of the Fed as a regulator, I almost find it comical, if I'm being completely honest, because they miss more than they catch. A great example of this, and it doesn't get deeper than this, is Silicon Valley Bank. The CEO of Silicon Valley Bank was on the board of the San Francisco Fed. How close, how much, like how much of an incestuous relationship do we need between the banking class and the Fed, who are supposedly behind a different wall and supposedly, I mean, they were warning this bank for over a year that their assets were underwater, and the bank took no measures to improve it, and the Fed did nothing to penalize them or to help encourage, through their mandate of regulating, winding down those bad assets.
Right.
So
and
if
then
we're
opened up the window for them to borrow at par or whatever, right?
yeah.
And
We
so
had
they-
several
you
discount
guys
windows.
watching here, you took the heat of it because they had that incestuous relationships, ignored the hell out of it. And as soon as it all broke down, guess who had to pay? Same person who always has to pay. You. Yeah, I'm looking at you out there. Yeah.
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 And you had basically a Treasury secretary who said after that, we're going to go ahead and decide if you matter or not.
Yeah.
Oh,
Yeah.
another fun one, guys.
Yeah.
One more fun one, two more fun ones, just real quick about the inefficacy of regulators, because this grinds my gears a little bit, and I always like to go back to some of these stories. Tim Geithner of New York Fed fame, he was the president before he became the Treasury Secretary under Obama. His first marching orders under Obama, and he's not even in charge of this, he told the White House, don't prosecute Wall Street. It will, in his words, undermine trust in the financial system. Can you imagine? Preet Bharara, who was the U.S. Attorney of New York, the Manhattan district that oversees Wall Street, described the crimes of the great financial crisis to be, in his words, too complicated to prosecute. And we're talking about federal prosecutors that have incredible latitude to prosecute anyone for anything at any time.
Yeah.
They didn't want to regulate. There was no will.
Yeah, they could hire like smart guys like you, like Jim Bianco, to a much lesser extent, me or Bobby. We could actually walk them through this shit. You know what I mean?
Yeah.
Yeah. So it's just quite amazing to me. You mentioned banks. Is anything interesting to you within the financial sector right now? Big, little, small, yield curve related? What do you got?
I think that one thing we need to watch out for is the vulnerability of some of these regional banks that have larger exposure to commercial real estate and particularly office buildings, and how that may hurt them if interest rates on the long end grind higher from here. That's still an open issue. It has not been settled, and we see delinquencies and defaults in commercial mortgage-backed securities on the rise again. And I'm looking at banks like MTB because they have incredibly high exposure there.
Are you actively short any of them or no?
I'm looking for rates to push up a little higher. My pain point on the 10-year is above 4.5%. I think if we start to see some build, especially with some degree of velocity, and we know these guys are not hedged, they're still not hedged on their books, that's when you start to see some pressure coming back into the common equity. So I'm looking for that benchmark rate above 4.5%, and then I think some put spreads on MTB could be interesting.
Okay.
Timmy says, of note, SVB had their DEI department fully staffed, and their chief risk officer's role was vacant for 9 months before they failed.
Yeah, they were going around the world promoting DEI, actually.
Yeah.
Like the chief risk officer was doing this whole campaign of all this stuff, not looking at the bank literally on fire before their very eyes. And the Fed knew about all this too. I mean, it just provokes the idea that, yes, I mean, even Adam Smith advocated for regulation. And that's fine. But
I'll tell you, we would not have had a feminine looking robot on here if it wasn't for DEI. I'll tell you that right now.
Such nice features on that robot. It's kind of cute.
Yeah. Echo says they want failures. It gives them handouts. Theo Vance and Musk Sensei was instrumental in the downfall of Silicon Valley Bank. I don't know exactly what Echo's talking about here. Echo, if you have any data on that, we'd love to talk about it. I'd love
But
to
we
see
don't, I don't disagree. I mean, I don't disagree with it and dismiss it
it. You know,
offhand.
neither do I. I want to see it.
I
think it'd
want
be
to
a
see it more
fun
because I
talk
think
about
it actually is interesting and probably right. Yeah.
Yeah.
Timmy, so I
again,
wanted to
real
get it.
quick.
What's
Louis,
that?
let me just throw Timmy again, because Timmy is a CRE guy, Mayhem.
Yeah.
Down here in Southwest Florida for 30, let me say 60 years, because I think he's older than me. Tim, are you
not
older
that
than
one.
me, or do you just look older than me? All right.
Oh, boy.
No, SVP had their DEI. Wait, that's the same thing.
That's the same one. Yeah.
One on the bottom there, Luis. On CRE,
Oh, yeah.
Pay attention to apartments that were built in 2022, 2024. Defaults are soaring. See, that's kind of interesting shit. Timmy knows. I love that.
Yeah.
Yeah, that's very interesting.
There's other sectors I want to look into, like oil and oil companies. Is that just because, Bobby, I want you to answer that too, because I think your knowledge on oil is pretty much unmatched. But is there anything you're looking at, Mayhem, within energy?
So in the US, my understanding is it's really more challenging for a lot of these companies to make money under $65 a barrel.
Right.
And so I would be much more constructive on XLE, XOP, and some of the leading energy producers and gas producers if we could get oil prices a little bit higher. I'm not super thrilled about OPEC Plus basically saying we're going to flood the market with supply so we can consume market share, full well knowing that's going to hit the oil patch. So that's kind of my concern, and then add to it some potential for downward economic risk as the year goes on. And I'm not necessarily looking at longs right now, but I think if we see some signs that demand is starting to firm and it's soaking up some of that excess supply and we could start to push prices above 60, 65, I would be starting to look at XLE and XOP as sector longs, and then possibly looking at some of the leading companies in the space as well.
Like,
well, I'd like to look at Exxon and Chevron. I think they're still reasonably good plays. There's some of the smaller companies in the space that might start to look more interesting again. I'd have to go back to my notes, but I think that at the end of the day, right now, it's time to kind of sit on one's hands. But I'm interested to see what you guys think. I just see a lot more left tail risk in the space for now.
No, I don't have much of an opinion on oil. It seems to be stagnating. And the fact that, we can debate all day why OPEC seems to be flooding the market. They say it's, they want to grab market share. I think Russia might have something to do with it. We're trying to maybe break them in a way. Bobby, does that make any sense?
Yeah, I could totally see that being a thing. So a couple of things that, I could talk about crude oil for the rest of the show. But the bid we saw yesterday in crude oil futures, and Jimmy, you know this because we talked yesterday, was according to a lot of my contacts, China is stockpiling crude oil. They've been building more and more storage, and they're stockpiling crude oil at these levels because they believe that it's too low for this time of year. So they believe they're getting value. They were closed for their May Day or Labor Day week, which is like May 1st to the 5th. And they came in guns blazing yesterday. And basically that exhausted itself. So we're going lower again. Jimmy, I don't know if you remember a couple of weeks ago, I said that I would short crude oil. And I don't remember who the guest was, but you and the guest said they don't see it going down to where my target was, which was 55.32. It hit 55.30 on May 5th. And as I said at the time, that was just a trade. I don't see it sustaining down there either. Now, to Mayhem's point, $65 is the number. That's the general number for U.S. production. It just isn't profitable en masse, below that. Having said that, I bought a 130, 125 put spread in Diamondback Energy. The symbol is FANG. Actually, I could tell you exactly when I bought it if I look it up here. I bought it the 25th of April, and it just went in the money. I believe today. I don't really watch it closely, but because of the time decay, it hasn't really done what I've wanted it to do yet. I don't like the long side of crude oil, but I'm not short other than that Diamondback Energy option with Jimmy. I'll probably get out of that soon.
Sure.
As soon as I get a couple of cents in it, I'll probably get out of it.
I guess my point.
U.S. production, real quick.
Sure.
It's not only difficult at the price level here, but one of the things that I think the Trump administration did very, very wrong is they went tariffs before they went heavy on deregulation.
Right.
And that affects the crude oil producers probably more than any other industry directly. And I'm not sure why that was done. I feel like there may be a reason, or it could just be maybe, he was eating hamburgers and forgot. I don't know.
Right, exactly. But if deregulation happened hard within the oil industry, does that 65 number, where can they move that down to?
That might be part of it, because I believe, and Mayhem, you can argue if you disagree, I believe this is Bessent's plan we're watching, not Trump's. And I think Bessent is like, well, what do you want to produce all this crude oil now for? The price is already going to go down if we slow the economy, basically doing the Fed's job by slowing the economy to kill inflation. So OPEC, I think, I think pressure was on OPEC since Trump and his administration knew they couldn't produce overnight. You know, people talk about at a certain price, we just start producing again. It doesn't fucking work that way.
Yeah.
You don't just turn on a faucet, man. There's a lot that goes into it, you know? So when I look at it from that perspective, I think there was probably pressure put on Saudi Arabia. Although the last thing I'll say, Jimmy, about crude oil, the new 411,000 barrel a day quota added to the supply, a lot of it has already been being produced by Iraq and Nigeria. The chronic overproducers were already producing at the level that they're now publicly allowed to produce. So you have to see if they're actually going to produce more than that. I don't really think they can.
As Mayhem said before, it's a system based on trust. What do you got, Mayhem?
Yeah, and I think OPEC is losing trust in each other as time goes on as well. And what you said speaks to that point, because there was all these shenanigans going on behind the scenes about overproduction and, you know, quotas being sort of seen as arbitrary. And now they're making it official. Hey, we're overproducing. I think it adds slack. I think that everything Bob said is on point. And I think that the other thing that we have to kind of look for is just in aggregate, what's happening to the U.S. consumer. Because when we were in the fourth quarter of last year and we saw some of this downward trending in the first quarter, there was a very strong consumption trend with a K-shaped distribution. And what I mean is about 10% of the tippy-toppiest income earners were making up about 50% of consumption. And that's insane. But what it also tells you is that if wealth effects from this volatile market start to depress those consumption trends, one area that's going to hit is energy. So I'm really interested to see how the stock market does from here, because the wealthy tend to have a lot more exposure, their aggregate net wealth, their assets in stocks, and they tend to spend more heartily when stocks are on the rise and when there's less uncertainty on the horizon.
So Spain just came out with tourism data saying, I think the last 2 weeks were their two biggest tourism weeks since they've been keeping data. I was just in Italy, Rome and Florence. Both the people there were said they had never seen the crowds like this before. Rome, part of it explained by the conclave and the Pope, but Florence, it's not. Disney parks traffic, I think, was really good this morning, right?
Really,
so
really
what
good.
the hell's
Yeah,
going on?
really
If we're slowing down to, and Mayhem, and that statistic about 10% and 50% is amazing. It normally runs about 35%. To be 50% was crazy, I think. Do you think that the YOLO spending is still going on as a function of COVID? What the hell?
I do think that the YOLO spending, as you say, is happening as a cultural shift. And what we've seen is younger people especially want to spend and have experiences now rather than save and have security later. And that's become a trend. This is structural. Like, they're not saving for retirement. They're not necessarily buying a home. They're doing all their travel and fun stuff earlier in life. And so that's pulling forward demand on a generational basis. And I think that's part of what you're seeing here.
I think so too, Bob.
Yeah, a couple more comments, and then I'll let you play us out, Jimmy. First one is Echo started explaining what he meant about his Vance and Musk sensei comment. He said he had biz with the bank. He and close friends started the bank run, went public with it a day or two later, then followed that up with caught wind of the instability and tested it. I think testing it is you applying motive, and I'm not sure you can do that, just to be fair. Then Widge says, the rubber hits the road. By the way, Mayhem, if you don't follow Widge, you two guys should follow each other. Widge is a very smart guy. The rubber hits the road for the consumer with gasoline prices. Would love to see the administration do something with standardizing the formula across the country. Any shot at that?
It's hard when I disagree with Widge.
I know. I don't agree with that at all.
Widge, I'm in a state that taxes the shit out of gas. I want states that can make mistakes, to make every mistake, drive everybody out, and lose. I know that I'm standing in a state that will lose, but I hate when the Fed comes in and says, you guys can't be stupid. I understand. We agree on 99% of things. This one I don't agree with. Mayhem?
I'm just going to take a completely different look at this and just from a different perspective ask, why aren't they filling the SPR now?
Why? I've been thinking about that for 6 months. What the hell?
But now it's like 50 something a barrel. We're going to, obviously, if they do see a slower economy moving forward, we could get lower prices, and maybe that's what's part of the thinking here. But at the end of the day, it's a strategic petroleum reserve. It's not, we're not trading. We're building oil in case there's some kind of shock so that we can dig ourselves out of that and not have a giant economic disruption. So I feel like the last administration made a huge error trying to manipulate the price of energy, draining the SPR, just turning it into this sort of like using it for something that it wasn't meant for, a political cudgel, if you will. And now this administration's making a mistake not refilling it at a time where I feel like, we might be closer to a bottom. I don't know. Depends on the economy. But at the very least, if this is something to prevent and cushion from shock, it's an imperative in the here and now to begin refilling it.
I agree. And I think it's a mistake, but I do think they don't want to do anything that could push the price of crude higher, because it's one thing that they have that everybody agrees is a good, we don't, because there are some, second derivative effects when crude is too low, like we talked about in the oil patch. But most people in this country will be like, well, that's a good thing. So I think they don't want to blow that right now while they're having a little bit of a credibility issue.
So real quick, there's one last comment from Echo, and then Widge, I'm going to have to pass on your last one there because we're running out of time. About oil there, Luis. It's the oil comment. Oil, how long is the blowout carryover from Biden era? Behind the scenes fighting inflation, incessant supply line disruptions. Not sure what you mean by the last two things. I just want to talk about the blowout.
Is that pipeline stuff? Pipeline stuff, maybe?
Behind the scenes fighting inflation, incessant supply line. I mean, a supply line just reads as pipeline to me, but he may not mean that. I don't really
mean supply chain.
Maybe. I don't really like, the only thing a president can do for crude oil production is put pressure on Saudi Arabia. Okay. And I don't even know, even when they say they do it, I don't know if they did. Doesn't matter who president is. And create legislation and allow leases, or delete legislation and allow more leases. That's all they can do. So for me, I don't particularly look at a president, like I don't look at this recent move lower in crude oil and say, wow, Trump really did what he said he was going to do. He didn't do anything.
Yeah.
He didn't do anything.
Probably
other than drop the stock market, which may have, shorter term economic effects and slow demand. I don't know, especially with Chinese demand. China's demand was already poor. And the fact that this particular trade war is going on could extend that economic poverty in China. But I don't know.
They're in trouble. They're in serious trouble. I mean, they've had this rolling real estate crisis that they've been foaming the runway, trying to make sure it doesn't turn into something worse. And to their credit, so far, overall, it hasn't metastasized into something more terminal, but it's still there. It's still rot underneath the surface, creating persistent disinflation and deflation in the country. Add to it, the youth unemployment rate is still staggeringly high. All these factory dismissals now because of the trade war, putting additional pressure on the economy. Look at their bond yields. They've been tanking. I remember I was putting charts out about this and I was getting flack from people saying, oh, but somehow magically in other countries, when bond yields go very low, it's not a sign of a lack of confidence in the economy. And I'm like, well, no, actually, it's exactly that. It doesn't really matter where it's happening, but there's really a problem. And I think that what they're doing now is saying, look, this hit to our economy, and they kind of telegraphed this in advance last year. They basically said, we need to figure out where this trade war goes. We have sort of our, rounds in the chamber if we need to respond. Now they're starting to respond. We saw it from their central bank. They're easing policy. They're injecting liquidity. We're going to see it from their government as well. They're going to try to stimulate domestic consumption trends to offset the hit to exports. And this is, again, why I think we need to look at commodities more constructively. Near term, China's in trouble. Intermediate term, they're going to throw a lot of weight behind trying to expand their economy. And if we zoom out, global money supply, the largest source of growth since the great financial crisis, has been from China. So it's important what they do here.
Wow.
I am going to throw this last thing out, Jimmy. Widge did say there were reports that damage was done to the storage for the SPR that needed to be repaired. I hadn't heard that, so I don't know if it's accurate.
That is a good one, Widge. I'll look into that for sure. All right, our producer's got to go. He's got a life. We can't just talk all day. We got to wrap it up. So tell them where they can find you, Markets and Mayhem.
Yeah, you can find me on X at Mayhem 4 Markets, Mayhem 4 Markets, same on YouTube. You can learn more about my work by visiting traderaid.com.
That's awesome. I am Jim Uriel. That's Bob Iacchino. This is Trader's Edge. Thank you guys, though, so much for following us. And we take a lot of these topics that we talk about on the Tradier Hub, and we just break them down. Excuse me.
What the fuck?
Down a
We
little
just
bit.
break them down into plain English. I'm just taking over here.
No, I'm a professional. I swear to God. Take two. When this goes live, we'll smooth it out. Oh,
Right.
shit, it is live.
It is live.
We take a lot of these topics that we talk about on the Tradier Show and we break them down on our newsletter, The Unfiltered Investor. Please check that out. Thank you guys so much for all your support. Remember what our mission is. We were in legacy media for too long, too much at the whim of different sponsors and overzealous producers. We want forums like the one Tradier is creating here where we can talk about things honestly. Thank you for joining us. This has been the Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.